Thanks for joining me. My name is Yakun Liu. I'm a member of the investor relations team at Silvercorp Metals. Before we get started, just a quick heads up that we'll be making forward-looking statements today. So we'll begin by looking at a snapshot of what Silvercorp represents. We are known for being an established primary silver producer with a long history of growing our production and generating strong financials from our mining assets, represented by the red bar on this chart, which I'll come back to. But we also remind everyone that Silvercorp has two other major assets in addition to its operations. The first one is cash. We have about 189 million of cash in our treasury as of September 30th. And this position was really acquired through the old-fashioned way of operating a business and making profits, as we don't have any debts and we haven't done financing since 2010. We do pay a modest dividend, but the accumulations of this cash is really intended to fuel our strategic growth plans. And as some of you may be aware, that we're in the process of acquiring a company called OreCorp. Next up on the value stack is the blue bar, which is the value of mining equities. So we have positions in various private and public companies where we see potentials for growth and value creation. And as of September, that position is worth about 124 million. And New Pacific Metals, which is a public company operating in Bolivia with 3 high-quality projects, is the bulk of that position. And as New Pacific's largest and very supportive shareholder, we're very excited to see continued value creation in 2024, which could be a very pivotal year for them with a number of key catalysts on the horizon. So if you were to take our current market cap and you subtract our cash and our investments, that means the market is only paying on a look-through basis less than $100 million for our mining assets, which is a ridiculously low number given that the average consensus NAV for those assets from analysts is about 575 million. Our mines have been consistently profitable. We've generated about 90 million in operating cash flow over the last 12 months. And in our most recent quarter, we produced silver at $11.50 an ounce on an always sustaining basis. We have plans to further grow those assets, which I'll talk about later, but we do see ourselves going from 6.5 million ounces in our last fiscal year to about 8 million ounces by fiscal 2026. And of course, we wouldn't be where we are without having a solid relationship with the communities and all levels of the government where we operate. So this is a snapshot of our mining assets. The new mining district is our flagship operation, and it comprises 7 underground mines delivering ores to 2 milling facilities. Our second and smaller operation is the GC mine south of the country. Both operations produce a lead concentrate containing silver, as well as a zinc concentrate, and all told, our mines have produced over 90 million ounces of silver since production began, as well as over 1 billion pounds of lead and zinc. And despite being in production for nearly 20 years, we still have a 15-year mine life remaining, and that's based just on the reserves. There's a number of advantages operating in China. The first is that we're close to our customers, which are the smelters. So less transportation issues to deal with, and we also have a very low capital requirements. Similarly, we're close to the suppliers of goods and services used by our mines. We have a very capable and very disciplined workforce. The regulations for mining have been very stable, as evidenced by our 18 years of continuous operating track record. We do have a free market for our metals, and just like any other Western companies with manufacturing facilities in China, we're free to distribute our profits outside the country. It's the quality of the assets that has consistently delivered our peer-leading margins. You can see that our EBITDA margin on a trailing 12-month basis was 42%, which is about double the peer average and roughly in line with the GDX. But if you were to think of us as an industrial company and compare us to a broader basket of industrial names, you can see that our EBITDA margin far exceeds their group average. If you were to work your way down the income statement, looking at the return on equity, that 8.4% over the last 12 months, again, far exceeds our peer group average. The work have been putting into our assets has allowed us to grow our production as well as our resource and reserves. Starting at the top, on the left-hand side, you can see that we began our operations with no proven and probable reserves, but the drilling and the tunneling and exploration have allowed us to build a pretty sizable inventory where over the last few years, we've been running pretty stable with about 115 million ounces of reserves. Measured indicated resource are 95 million ounces. On top of that, not included in the proven and probable, and inferred resource is another 126 million ounces. And we've done this while replacing our production, as well as growing our output from a modest sub 2 million ounces per year in the beginning to really now we've been tracking between 6 and 6.5 million ounces over the last 7 years. As I mentioned, we have a growth plan to further expand and optimize our operations. At our flagship mining district, exploration remains a very important growth driver. We've completed about 1 million meters of drilling in 3 calendar years, and we continue to drill fairly aggressively in 2023 with about 270,000 meters budgeted for the year. And the focus has been on extending known mineralization within the footprint of the mines, as well as making new discoveries, such as the new gold and gold-copper structure that we're starting to unravel geologically. There are also a number of optimization projects currently in progress, including increased mine mechanization to boost productivity, XRT ore sorting to improve head grades, as well as paste backfill to enhance mining recovery. And as part of that expansion program, we're in the process of building a third tailings storage facility, as well as evaluating another expansion at one of our milling facilities. And as part of our regional growth strategy, we're looking to bootstrap a satellite project called Kunping, located north of Bing, which we acquired back in 2021, into production as early as this year. Despite the quality of our assets, we still find ourselves looking at very compressed valuation multiples compared to our peer group, really at the lower end of EV to EBITDA, price to earning, and price to cash flow metrics. But we think this in part reflects the market's anticipation of what's next for Silvercorp. Other than the organic growth, the market is waiting to see what our plan is with the cash. And we do have an answer for that. And that is diversification into gold in a new jurisdiction. So last year, we announced a transaction to acquire an ASX-listed company called OreCorp. It's a NAV accretive transaction, and the asset that we're acquiring is their Nyanzaga gold project in Tanzania. It's a largely de-risked project that's permitted and it's backed by a definitive feasibility study done in 2022. So it's ready to go, and the project will deliver significant gold ounces over a long mine life and will add meaningfully to our operating and financial results. Obviously, it provides immediate geographic and metal diversification, and based on the size of the resource and the skill, what we're looking to do here is to move ahead quickly and develop this asset once the transaction is complete. And we look forward to provide more updates on OreCorp over the coming weeks. I'll just finish up with a quick snapshot of our capital market profile. On the left-hand side, our top 10 shareholders. You can see that in addition to our chairman and CEO, Dr. Wei Feng, a mix of familiar institutions, both traditional long-only funds as well as passive ETFs. We're also covered by a number of analysts in Canada and the US, and from a shareholder standpoint, the bulk of our shareholder base is retail investors, along with small high net worth and family offices. Roughly a third is owned by institutions, and insiders owns about 4%. And that's all the time we have for today. Our booth here at VRIC is at 6:13, so if you have any follow-up questions, please come by. We're always happy to chat with you. Thank you very much.